Ladies and gentlemen, good day and welcome to the Q4 and full year FY24 earnings conference call of Dr. Reddy's Laboratories Ltd. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Richa Periwal. Thank you, and over to you, ma'am.
Thank you. A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddy's earnings conference call for the quarter and full year ended March 31, 2024. Earlier during the day, we have released our results, and the same is also posted on our website. This call is being recorded, and the playback and transcript shall be made available on our website soon. All the discussions and analysis of this call will be based on the IFRS consolidated financial statements. The discussion today contains certain non-GAAP financial measures. For a reconciliation of GAAP to non-GAAP measures, please refer to our press release. To discuss the business performance and outlook, we have the leadership team of Dr. Reddy's comprising Mr. G.V. Prasad, our co-chairman and managing director, Mr. Erez Israeli, our CEO, Mr. Parag Agarwal, our CFO, and the entire investor relations team. Please note that today's call is a copyrighted material of Dr. Reddy's and cannot be rebroadcasted or attributed in press or media outlet without the company's express written consent. Before I proceed with the call, I'd like to remind everyone that the safe harbor contained in today's press release also pertains to this conference call. Now, I hand over the call to Mr. G.V. Prasad. Over to you, sir.
Thank you, Richa. Good morning and good evening to all the participants here. Welcome to the annual earnings call of Dr. Reddy's. I am delighted to be here today along with the members of the management team and the IR team. As many of you know, I join the earnings call each year at the end of the financial year. FY24 marks our 40th year of serving patients with a legacy of innovation, affordability, and sustainability. Guided by our purpose of accelerating access to affordable and innovative medicines for our patients, in the last 4 decades, we have moved from our beginnings as an API business to generic and OTC medicines, biosimilars, drug discovery, and services. As we bring to life our credo of good health can't wait, we have accelerated our journey through licensing and collaboration in the areas of novel medicines and consumer health. We delivered a strong financial results in FY24. Our growth and profitability in this year have been driven by our performance in the US. We have also made significant progress on future growth drivers through licensing, collaboration, and pipeline building. Our focus in 2025 will be to further strengthen our core businesses through superior execution as we invest to build the future growth drivers. I am grateful to our people, the healthcare community, partners, and stakeholders for the trust reposed in us. We are committed to increasing the number of patients we serve around the world through our exciting pipeline of products and services. As we do this, we remain committed to the elements of sustainability, preserving the environment, positive social impact, and good governance. With this, I'd like to hand over the call to Parag for taking you through the financial performance of the company.
Thank you, Prasad. Greetings to everyone, and I hope you are doing well. I am pleased to take you through our financial performance for Q4 as well as for the full year of fiscal 2024. As indicated earlier by Prasad, FY24 has been yet another year of outstanding financial performance with all-time high revenues of over $3.3 billion and highest ever profits. This fiscal we recorded a double-digit growth in revenues, EBITDA as well as PAT. For this section, all amounts have been translated into US dollar at a convenience translation rate of rupees 83.34, which is the rate as of March 31st, 2024. Consolidated revenues for the fourth quarter stood at rupees 7,083 crores, which is $850 million, and grew by 12% on year-on-year basis, with a sequential decline of 2%. Adjusted for brand divestment income in India on a rebased comparator, the underlying overall growth was higher at 17% on year-on-year basis. The underlying year-on-year growth is largely driven by the generics business in US and emerging markets. The QoQ decline is mostly on account of declining revenues from Russia, the US and India. The revenues for the financial year 2024 stood at rupees 27,916 crores, that is $3.35 billion, and grew by 14%. The growth was primarily driven by improvement in the base business volumes across several geographies. Consolidated gross profit margin stood at 58.6% for the quarter, an increase of 140 basis points over previous year and 7 basis points sequentially. The year-on-year increase was on account of improvement in product mix and productivity-linked cost savings, partially offset by brand divestment income during the previous period. Gross margins for global generics and PACI were at 62% and 28.6% respectively. Consolidated gross margin for FY24 stood at 58.6%, an increase of 193 basis points over FY23. Gross margin for the global generics and PACI business were 62.9% and 23.2% respectively for full fiscal FY24. The SG&A spend for the quarter is rupees 2,048 crores, which is $246 million, an increase of 14% year-on-year and 1% quarter-on-quarter. The year-on-year increase is primarily on account of investment in sales and marketing activities and new business initiatives. The SG&A cost as percentage to sales were 28.9% and is higher by 34 basis points year-on-year and 87 basis points quarter-on-quarter. The SG&A spend for the year is rupees 7,720 crores, that is $926 million, and has grown by 13%, largely in line with the business growth. The SG&A cost as a percentage to sales was 27.7%, which is in line with the previous year. While we continue to invest in strengthening our existing brands in digitalization initiatives, expanding into new businesses to create future growth platforms, and developing our talent, we are focused on operational excellence and productivity improvement across all aspects of our operations. We continue to invest in R&D to support future business growth. The R&D spend for the quarter is rupees 688 crores, which is $83 million, an increase of 28% year-on-year and 24% quarter-on-quarter. The R&D spend is at 9.7% of sales and is higher by 119 basis points year-on-year and 200 basis points quarter-on-quarter. The R&D spend for FY24 is rupees 2,287 crores, that is $274 million, and has grown by 18%. R&D percentage to sales for the year stood at 8.2% as against 7.9% during the last fiscal. The increase is primarily on account of higher number of filings and our developmental efforts to building a healthy pipeline of complex products across our markets for both small molecules and biosimilars. The other operating income for the quarter is rupees 66 crores as compared to rupees 28 crores for the same quarter last year. The other operating income for the fiscal is rupees 420 crores as compared to rupees 591 crores last year. The other operating income was lower on account of one-time settlement income reported in the previous year. The EBITDA for the quarter is rupees 1,872 crores, that is $225 million, a growth of 15% year-on-year and a decline of 11% quarter-on-quarter. The EBITDA margin stood at 26.4% and is higher by 53 basis points year-on-year and lower by 283 basis points quarter-on-quarter. The EBITDA for the year is rupees 8,301 crores, that is $996 million, recording a growth of 14%. EBITDA margin for the year is at 29.7%, which is largely in line with the previous year. The net finance income for the quarter is rupees 102 crores as compared to rupees 80 crores for the same quarter last year. The net finance income for FY24 stood at rupees 399 crores as compared to rupees 285 crores last year. Profit before tax for the quarter stood at rupees 1,602 crores that is $192 million, a growth of 21% year-on-year, and a decline of 12% over previous quarter. Profit before tax for the year stood at rupees 7,187 crores, that is $862 million, recording a year-on-year growth of 19%. Effective tax rate for the quarter has been lower at 18.4%, and that for the year has been at 22.5%. The ETR during the quarter is lower due to a one-time benefit accruing on account of reversal of a tax provision, remeasurement of deferred tax asset owing to an increase in U.S. state tax liability, and adoption of corporate tax rates under Section 115BAA of the Income Tax Act. The ETR was lower for full fiscal FY24 mainly due to adoption of corporate tax rate under Section 115BAA of the Income Tax Act of India. We expect our normal ETR to be in the range of 24-25%. Profit after tax for the quarter stood at rupees 1,307 crores, which is $157 million, posting a growth of 36% year-on-year and a decline of 5% over previous quarter. Profit after tax for the year stood at rupees 5,569 crores, that is $668 million, a year-on-year growth of 24%. Reported EPS for the quarter is rupees 78.4, and that for the year is rupees 334. Operating working capital as of 31st March 2024 was 11,293 crores, which is $1,355 million, an increase of rupees 482 crores, which is $58 million over December 31st, 2023. The increase is mainly driven by higher inventory and receivables. Our capital investments in this quarter stood at rupees 503 crores, which is $60 million, and rupees 1,518 crores, which is $182 million during the year. The free cash flow generated during this quarter was rupees 529 crores, which is $63 million. The free cash flow generated during this year before acquisition-related payout was at rupees 2,672 crores, which is $321 million. Consequently, we now have a net surplus cash of rupees 6,459 crores, that is $775 million, as on March 31st, 2024. Foreign currency cash flow hedges in the form of derivatives for the US dollar are $903 million, hedged around a rate of rupees 83.6 and 84.20 to the dollar, maturing over the next 12 months with knock-in available, which allows participation when USD strengthens. And for the ruble, are ruble 2550 million at the rate of rupees 0.882 to the ruble, maturing in the next 3 months. With this, I now request Reddy to take us through the key business highlights.
Thank you, Parag, and very good morning or good evening to everyone on the line. FY24 has been a year of progress across our businesses. We focused on our strengths while also identifying and maximizing opportunities to diversify and differentiate our business, leveraging new technologies and driving efficiencies. Dr. Reddy's delivered a strong full-year performance with the highest ever revenue and EBITDA. Let me take you through some of the key highlights of the year as well as the most recent quarter. One, we had double-digit revenue growth in Q4 at 12%, and for the full year at 14%. Our reported EBITDA margin stood at 26% plus for the quarter, whereas we ended the full year at a robust 30% plus. We delivered higher returns with our annualizing ROCE at 35.5%. Net cash surplus was $775 million as we exited the year. We have consistently maintained that strategic collaboration will play an important role in our growth story. Apart from growing our core business of generics, we invested in businesses of the future under the 3 spaces of consumer health, digital therapeutics, and access to novel molecules. Recently, we have joined hands with the global FMCG giant Nestlé to form a joint venture company to bring nutraceuticals to consumers in India. The JV will leverage the trusted global brands of Nestle Healthcare Science and the well-established commercial capabilities of Dr. Reddy's in India. In Q4, we entered into an exclusive partnership with Sanofi to market and distribute its vaccine brands in India. This has taken us to the second position among vaccine players. Our partnership with Bayer in India for the second brand of the molecules, Vericiguat, brings this new class of drugs in heart failure management to patients in India, in and beyond metros, in Tier 1 and Tier 2 towns, and strengthens our play in the chronic segment. Our partnership with pharmas enable us to market Cetaquin in India, which has demonstrated significantly better and promising outcomes in the management of hypovolemic shock. Our long-running strategic collaboration with Amgen was recently strengthened with an agreement to bring to India romosozumab injection under the brand Evenity, which is used to treat osteoporosis in women after menopause who are at high risk of fracture. As part of our self-care and wellness business in the United States, we acquired Menulab, a portfolio of women dietary supplements brands from Amiris Inc. We entered the UK consumer health market with the launch of allergy medication Istalide. We launched Bevacizumab, our first biosimilar in the UK. In the digital therapeutic space, after successful launch in India, the drug-free migraine management device Merivio has now been extended to Europe, starting with Germany and also to South Africa. Further, we have launched condition management program in India called Daily Bloom IDS, India's first ever digital integrated care plan to manage irritable bowel syndrome. In 2023, we had undertaken a pilot launch of direct-to-consumer e-commerce website Elevida Wellness for diabetes nutrition. We have decided to wind down the pilot to repurpose our resources to other initiatives. On a regulatory front, the US FDA has provided a VAI status of two of our facilities in Bachupally, Hyderabad, our formulation manufacturing facility FY3, following the routine CGMP inspection in October 2023, as well as our R&D facility following the GMP and pre-approval inspection in December 2023. The US FDA has issued a complete response letter to our biologics license application. This has no impact on the development or manufacturing of any current product pipeline. We will continue to work closely with the US FDA to address and resolve all concerns within stipulated timelines. We have delivered consistent industry-leading performance across key ESG ratings. We have been included in the S&P Global Sustainability Yearbook 2024 for the fourth consecutive year, making it to the top 10% score category for the first time. We received an A rating in CDP supplier engagement, which is in the leadership band. Also, we are the only Indian pharma company to get an A- rating in climate change and water security for our 2023 CDP disclosures. Through all these efforts, including the learnings from the challenges, we remain committed to meet the unmet needs of patients and to enhance the standard of care. We continue to be a partner of choice, given our commercial strengths and footprint, our strong governance, ESG, and progressive people practices, and of course, our financial discipline. Now, let me take you through the key business highlights for the quarter and the full year. Please note that all references to the numbers in these sections are in respective local currencies. Our North America generic business recorded revenue of $392 million for the quarter, with a growth of 26% on year-over-year and a sequential decrease of 3%. On a full year basis, we recorded revenues of $1,608 million with a growth of 24% over the previous year. The increase was largely on account of market share expansion in certain key products, integration of the acquired main portfolio, and forex gains. This partially offset by price erosion. We launched 5 new products during the quarter and a total of 21 products this fiscal. We expect the launch momentum to continue in FY25. Our European generic business recorded revenues of 58 million euros this quarter, with year-on-year growth of 3% and a sequential growth of 4%. On a full year basis, the revenues were 228 million euros, recording growth of 9%. The improvement in the business volume and contribution from new product launch during the years helped offset price erosion. During the quarter, we launched a total of 6 products across markets, taking the aggregate launch in Europe for the fiscal to 42. Our emerging market generic business recorded revenues of 1,209 crores rupees in Q4, a year-over-year growth of 9% and a sequential decline of 6%. On a full year basis, emerging market revenue were 4,864 crores rupees, a growth of 7%. On a year-to-year basis, market share expansion and revenue from new products more than offset the unfavorable forex. We launched 17 new products during the quarter across various countries of the emerging markets, and a total of 106 products in FY24. Within the segments, the Russia business grew by 9% on a year-to-year basis, but declined 13% sequentially in constant currency. Similarly, on a full year basis, Russia grew 16%. Excluding the income from brands divested last year, India business recorded a double-digit year-on-year growth of 11% in Q4, a sequential decline of 5%, and 5.5% growth for the fiscal. As per IQVIA, our IPM rank was 10 for the quarters and 11 for FY24. Including the divestment income, our India business recorded revenue of 1,127 crores rupees in Q4, with a year-to-year decline of 12%. On a full year basis, revenue were 4,641 crores rupees, a decline of 5% over the previous year. Our focused brand approach, coupled of sales rep productivity improvement, has led to steady improvement in our performance during the quarter. 3 new brands were launched in this quarter, taking the total number of brands launched to 13 this year. Our PCI business recorded revenues of $99 million in Q4 of FY24, with a year-over-year growth of 4% and sequential growth of 5%. On a full year basis, the revenues were $359 million, with a marginal decline of 1% over the previous year. We filed 48 drug master files this quarter, taking the annual total to 133. We continue to focus on research and development to create robust portfolio product pipeline that will drive future growth. Our R&D investment this quarter stood at 688 crores rupees, up 28% year-over-year, driven by our biosimilar products pipeline, as well as the development efforts across generics and our novel oncology asset in origin. Further, we will complement our in-house efforts with partnerships and collaboration to develop innovative solutions. We have done 21 global generic filings, including 9 ANDAs, 1 NDA in the US during Q4 FY24. Total number of global filings for the year stands at 43, with 7 NDAs and 2 NDAs in the US. Our capital allocation priorities remain unchanged, with our number one priority being to reinvest in our business, both in the pipeline as well as in building businesses of the future. Our strong balance sheet provides financial flexibility, and we remain committed to pursuing value-enhancing business development transactions to augment our organic growth effort. As we exit the fiscal year on a positive note with a robust financial performance and strategic move to take us a step closer toward our medium to long-term goals. I look forward to sustained growth momentum in the base business and a seamless integration of acquired assets in the next fiscal. With this, I would like to open the floor to questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks for taking my question. My first question is on the Nestle JV that we announced last month. If you could give us some color on, when we should start, looking at probably rollout of these brands and, how should we think about ramp up of the entire JV revenue flowing through? Will it take a couple of years before it starts, contributing to margins, or would there be some incremental investment required? And just to follow on that, will this be, will the JV contribution be over and above the double-digit growth in India that we have talked about in the past? Is that the way we should think about it?
So yes, it's going to be above that. At the same time, it will take time to bring the brands that are currently outside of India to register them, to adjust them to the Indian regulatory needs or the taste of the people, and obviously to build the brands in India. So the way the JV will work is both parties are bringing the current nutraceuticals to the JV, and then at a certain sequence to bring the brands primarily of Nestle Health Science to India, register, qualifying them, building them. Likely that in the first 3 years it will be some level of investment. It's not going to be material investment in terms of total effort, but the revenues will come only in the years after that.
Essentially, I should assume that this starts contributing to the India business probably post FY26.
It will be post FY26, likely even post FY27. So the first couple of years will be years in which we will bring those products and build the brands at a certain sequence. So normally people will see the growth, but that's this has a potential to be a meaningful business, but it will take time to build it.
Got it. And my second question is on the R&D spend. We have a pretty high R&D spend, this quarter. You talked about it in your opening remarks. When can we start seeing the complex product pipeline that we're talking about, or the biosimilars, contribute to earnings, particularly in the U.S. market? Should we start seeing, and some of the areas if you could talk about, and the guidance for next year for R&D, please?
Yes. So in terms of contribution to the growth, the small molecules, we will see that already in FY25, some of them, more of them in FY26, and some of them in FY27, 28. So this is the pipeline that we have discussed in the past. In terms of the biosimilars, what will come from internal activity is likely that in FY27 we will start to see the products coming. The level of R&D for next year will be around 8.5 to 9%. This is the range that likely we are going to have.
Thank you so much.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie Capital. Please go ahead.
Yeah, good evening. Thank you for the opportunity. So first one on the US business, just a clarity. We have said that there was a base erosion on a quarter-on-quarter basis. So would the base include generic Revlimid contribution as well when you say base erosion?
You're speaking about North America, Kunal? I did not catch the question. This is about America?
Yes, yes. North America, we have said that the quarter-on-quarter decline is due to erosion in base business. So my question is, would this base business terminology include revenue from generic Revlimid?
Yeah. So the quarter obviously include the sales of lenalidomide. The decline is a combination of a sequence of service. So it's not a market share loss. It's more of a sequence of supply as well as a certain price erosion that was on the base business unrelated to lenalidomide.
Sure. And in terms of the US price erosion, while it continues, have you seen any change in the recent trend where it is again accelerating at a higher pace, in recent months?
So the overall sentiment is unchanged. Still, the lion's share of the interest is sustainability of service and supply. This is still the case. At the same time, we did face competition in some of our big products, and those products we did see price erosion, in which to some extent was compensated by growth of other products. So on those specific products, we did see price erosion.
Sure. And for the next year, how many product launches we have planned for the US market?
So about 20 plus.
20 plus. Perfect. Thank you and all the best.
Thank you. The next question is from the line of Sayon Mukherjee from Nomura. Please go ahead.
Yeah, hi, thanks for taking my question. Just one question on R&D. We have seen a significant step up, and as you mentioned, your guidance, it looks like you're talking about more than $300 million of R&D spend next year. If you can provide like where this money is being spent in terms of biosimilars or NC research and other generic activities?
So the R&D is spent obviously on the small molecules as well as the big molecules. I think the main contribution to the growth is the timing of the clinical trial of the biosimilars, which is about 20% of the R&D spent. So if you wish, between the small molecules and the big molecules, so you have about 60% that goes to the small molecules, about 20% that is going to the biosimilars, and the 20% that goes to either API or other initiatives like licensing in and activities like this.
Okay, thanks. And my second question would be, how do you see the growth in emerging markets in the years ahead, particularly with respect to China and, some of the key markets like Brazil, if you can talk about your outlook for fiscal 25 and 26?
So it will continue to grow. It will continue to grow in double digits. China looks good. We are now consistently submitting 14, 15 products a year. So this is likely to continue. And also we got some interesting approvals. So overall, in constant currency, I believe that we are in a good shape. Obviously, there is a risk of forex. This is remain the same. we have certain level of protection, but obviously if it will come, it may offset it. But overall, it looks good.
Okay, thank you.
Thank you. The next question is from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, everyone. This is Michaela on for Balaji. Thanks for taking our questions. Can you hear me?
Yes, please.
Okay, great. So we see you launched 4 new products in the U.S. during the quarter. Could you just provide a little bit more detail on these launches? And my second question is if you could provide a bit more detail on the CRL issued to the BLA for biosimilar rituximab. What are the next steps here and what did this entail? Thank you so much.
Yes, so on the launches this quarter, as I mentioned, we launched 5 products during the quarter. We kind of mentioned the names along the way. We will try to provide it to you in a second. As for the CRL, we got certain questions primarily about the CMC of the product, and we are planning to address that around the September timeframe, and then obviously I'm assuming it's a 6 months goal date after that. Yeah.
Thank you. The next question is from the line of Tarang from Old Bridge. Please go ahead.
Hi, congrats for extremely strong set of numbers for FY24. Just a couple of questions. Capital expenditures stepped up quite a lot in both FY23, FY24. If I look at 24 alone, roughly 2,700 crores of capex. So if you could just give us a sense in terms of a broad set of baskets where this 2,700 crore would have been deployed. So that's number one. Second, till date, if between P&L and balance sheet, if you could give us a sense on what your cumulative investments in biosimilars has been. And third, just a general sense on where your overall biosimilar business is at.
Yeah. So about CapEx, first of all, most of our CapEx is going toward expansion. Let's say, give or take around 75% of it is going to expansions. And normally, the other is going what we call maintenance. The maintenance is also whether you need to replace certain stuff or related to compliance or investment in the digital, etc. Also, in the future, in terms of distribution of the CapEx, also for next year, we are investing primarily the CapEx in products that we want to launch and with great capacity, both in the API as well as in our injectable facilities. So more than 50% of the CapEx is going that direction. In addition to that, we are building additional capacity in our biologics plant in batch quality, as well as in our APSL, our services on both biologics and small molecules. So by and large, this is where the CapEx is going. Is it sufficient? I don't remember the rest of the question.
Yeah, this is all right. So when you say expansion, these are broad buckets. I mean, it's going into API, injectables, biologics, and origin, right?
Correct.
Okay. If you could give us an update on your biosimilar business from year on, and what have your cumulative spends been on this business till March 24?
So in terms of biosimilar, just to remind us all, we decided to focus on products that we have a chance to be first to market. When we initiated that strategy, we kind of bypass the products that we had a chance to be late to market. So our first meaningful products will come in 2027, and after that, more products will follow. Right now, we are not discussing specific names, but that's the overall plan. What you can assume, and I mentioned it before, that if 20% is going to the R&D, this is give or take also at the level of loss that we have in a year, because right now we don't have a meaningful sales to cover for it, and this is something that likely to be break even and beyond, be profitable once we will launch in FY27 our first biosimilar in Europe and United States.
So therefore, would it be safe to presume an investment of anywhere between $50 to $60 million per annum on biosimilars? Would that be a reasonable estimate from your end?
Yeah, in the ballpark, yeah.
Okay. Thank you.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Thanks for the opportunity. Sir, just on rituximab, as far as Europe is concerned, where if you can share the
Tushar, the line for you seems to be a bad connection. Can't hear you.
Can you repeat the question, please?
You are not audible, Tushar.
Is it better?
No, you seem to have a bad connection. I request you to please reestablish your connection and then get back in the queue. Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead. Nimish, the line for you has been unmuted. You may proceed with your question.
Maybe you can move to the next one, yeah.
Yes, we will move to the next question, which is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Sir, thanks for your opportunity. I have a question on our manufacturing strategy for the India business. So I just want to understand, number one, what percentage of your manufacturing in India is being done in-house versus outsourced? And are you expecting to maintain a similar mix going forward? And second, for the outsourcing part, how many suppliers do we typically have? Is it like a fragmented supplier base or consolidated amongst a few companies?
Yeah. So when you said supplier, you meant global or for India?
For India. For India only.
So right now, about 60% of what we do is in-house, give or take. And likely that these numbers will increase in the future because we do have localizations of some of these products in the future. As for the numbers of partners, I don't recall the exact number, but I'm assuming that it's in double digits. Likely, but I don't have the exact number on top of my head.
All right. And for a follow-up on that, the government has been placing a lot of emphasis on stricter implementation of Schedule M norms and quality standards, right? So how can it impact our procurement strategy on the outsourcing front? So can it lead to some sort of consolidation of supplier base or maybe an increase in the procurement cost, etc.? Because if the quality cost increase for our suppliers, then our COGS might increase as well.
So I can tell you that for Dr. Reddy's, we have one standard of quality. We believe that all people deserve the same quality, no matter what is their nationality. And that's the policy of Dr. Reddy's. We encourage everybody to do the same. So for us, any guidance in that direction, we see that as an opportunity. And if there are people that need to upgrade their system, it's good. It's good for India.
All right. Thanks. I'll get back in the queue.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Am I audible now?
Yes, please go ahead, sir.
Just to understand, with respect to rituximab for the Europe filing, if you could share the progress.
Sorry to interrupt, but the line is bad again for you.
You can't hear.
May I request you to please move to an area with better network?
Is this better?
Yes.
Okay. Sir, on rituximab, just would like to understand the progress as far as Europe filing is concerned.
So rituximab we launched in the So rituximab we are planning to launch in the UK. As we speak, we did not do it yet. So we believe that we should get the approval soon. We are after the qualifications in the UK, and we are waiting for the inspection of the EMA as well.
Understood. So secondly, on the inventory, I see quarter-on-quarter reasonable increase. If you could explain that.
Again, sorry? Again, can you repeat?
There has been reasonable increase in the inventory on a quarter-on-quarter basis.
You're talking overall inventory?
Inventory, sir. Inventory.
Yes. So let me take that question. The increase in inventory is primarily because of some of the geopolitical risks which are there, which are having some impact on the routes of supply. So we proactively build inventory to make sure that there is no loss of sales. That's the primary reason for the increase.
Understood. And lastly, sir, this SG&A expense also we've seen increase over past 3 to 4 quarters. So is this the run rate to consider for FY25, or will there be further increase in this?
The overall, if you look at the SG&A expenses this year for the full year, as a percentage to sales, it's about 27.7%, which is same as last year. Now, quarter on quarter, you will find fluctuations happening. Broadly, we are investing behind our brands in sales and marketing, behind our capabilities, while also driving productivity. Broadly, I would say that SG&A over the next 12 months or so, the percentage to sales would remain in the same similar range.
Got it. Thanks for that.
Thank you. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Thanks for the opportunity. So if we see that we have a US sales of $390 million on sequential basis, it has decreased. Just try to understand, so this decrease in the base business or in the GWM business?
The decline is a combination of the sequential decline. Is part of it is normal pattern of ordering of the product. And part of it is some price erosion that we got on a few products. It's a combination of both.
Fine, sir. So what is the guidance of margins, full year guidance of EBITDA margins for FY25?
So as you know, we are not giving guidance. In general, we are repeating that the normal, long-term place that we want to be. So the 25% EBITDA with 25% ROC, double-digit growth, it's something that we are consistently saying that this is the range that we want to be. Sometimes we'll be above it, sometimes we'll be below that. But we feel very comfortable that this is a place in which we can both invest for the future, and it allows us a significant room for improvement for investing in the future, as well as bring very, very healthy return to the shareholders. This year we are by and large higher than that. But there will be timing that it can be even lower than that. But this is the where we feel comfortable to be. So we are more giving a kind of overall guidance, but we are not giving guidance for specific quarters or specific.
So when we say 25% EBITDA margins, that includes Revlimid also.
Like I mentioned before, this is our overall guidance, not for specific products. As you can see, when we launched the product, our margins were higher, so you can do the math.
Thank you, sir. Thanks very much.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. My first question is on the pricing trend that you would be seeing for Revlimid. So, and how sustainable the pricing trend currently that we are having for that, because there are multiple rounds of new player entry that we have seen. So whether that has impacted the realization potential of the product in the recent period.
So I'm not going to discuss quantities or prices of this product, as you know. Sorry?
Yeah, on the pricing front, I am not asking about.
I just said I'm not going to discuss pricing or quantities of this product. We need to remain confidential to our agreements. And what we can say that is going to stay meaningful products for us throughout the period of the agreement.
Okay. Then my first question then would be on the domestic formulation business. So obviously, as per your indication that you have taken multiple initiatives to either introduce branded products or to expand qualitative products and the long-term sustaining kind of sustainable growth driving kind of a product for the domestic formulation business, but in the initial period possibly may not contribute much. So if you can give some sense, let's say over a period of 3 years from now, what is the share of revenue mix that you should be seeing for your domestic formulation business?
So you can see that we have a flow of agreements that are coming. So what we say that the base business, maybe a step back, the branded generic business that we have in India will grow. This quarter it grew double digit if you take out the divestitures that we had in the same quarter last year, and likely that this will continue. On top of it, we started to launch already products. For example, we launched Nerivio, and we launched other products that will come, and this will be on top of it. So naturally, the expectation of India is to grow beyond the growth that is expected from the branded generics. Right now, it looks like a very healthy pipeline that is coming up on both the NCEs, the nutraceutical deals that I mentioned, etc. The expectation of both businesses, if you ask about the long term, is to be top 5 in India. If you want an assumption, it's in the neighborhood of around 12,000 CR somewhere in FY30. But this is obviously a neighborhood that we are striving to be. We believe that this is what top 5, give or take, will be at that period of time.
Okay. But is it fair to believe, sir, this domestic formulation business is going to be the growth leader for Dr. Reddy over the next few years? Is that fair to believe?
Yes, absolutely. India is a very important market for us, and we want to grow, and we want to grow the rank. And it's a growth engine, but it's also our main hub for innovation on both the back end as well as the front end. and the main place in which we believe that we can bring value, because most of the people that are collaborating with us have an interest in our brand in India as well as in our go-to-market capabilities.
My second question is about biosimilar business in the initiative, and also in collaboration with the R&D spend that we are likely to have. So whether you have talked about 9% kind of R&D spend guidance for the subsequent period?
I mentioned that 20% of our R&D is going to biosimilars.
Okay. And are you indicating in line with the quarterly trend, R&D spend as a percentage to sales, this is the kind of sustainable run rate now going ahead?
We believe that it's sustainable for us to be in what I said, 8.5 to 9%, and it could be some fluctuation, depends on the timing of the phase 3 of the products. But we believe that it's sustainable.
Okay. And so a extended question to that only, sir. So we know that having seen the kind of challenges that is there about biosimilar success in the US business, and the kind of upfront investment that is required for each molecule to develop a biosimilar. So what is the kind of a right to success that you do think for your biosimilar strategy?
So I mentioned the timelines before. We decided at the time to skip the products that will be late to market in order to be among the first one to launch the products, and we still hope to do that. The second one is that we are not developing only for the US. Obviously, the US is a very important market for us, but we are developing globally, and it's actually for us, it's about US, Europe, India, and emerging markets. And each one of them on the molecule that we chose these are meaningful markets for us.
Okay. Yeah, sure, sir. Thank you. Wish you all the best.
Thank you. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, we request you to please restrict your questions to one question per participant. The next question is from the line of Madhav Marda from FIL. Please go ahead.
Hi, good evening. Thank you so much for your time. Given that India is a core sort of focus market for us over the longer term, just wanted to get your thoughts on any risk that you see from rise of organized pharmacy retailing in the country, like it happens in most developed markets that we've seen over the past few years, and a rise of generic drugs in the country, which the government has also tried to push last year, obviously which didn't shape up. So just your thoughts on some of these factors and how they could play out for the country going ahead. Thank you.
So there have been several attempts to make this generic business a success, but given the enforcement gaps in quality and concerns about doctors about quality, we feel that the branded generic business will continue for a while. We don't see any imminent danger of it being commoditized by generics.
Given that some of the organized pharmacies come in, don't they solve for the quality angle?
The organized pharmacies are still a small portion of the overall sale. If you look at their market share, it's probably 12% to 15% range at the most.
So just to make sure, we do see obviously the certain portion of by the way, happen everywhere in the world, will become generics. At the same time, the market is growing as well. We recognize that trends long back, and I discussed it in previous meetings. This is why our main efforts and our main that is about actually true innovation, patent protected, etc. We believe that the brands, our brands that we decided to continue to focus on, will stay for a while, like Prasad just said.
Thank you, sir.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to one question per participant. The next question is from the line of Bino Patiparambil from Elara Capital. Please go ahead.
Hi, good evening. Just a question on a couple of products in the US. One, you had acquired the NDA to generate Lumify from Slayback Pharma. What's the status? When do you expect an approval?
Sorry, can you repeat the product? Sorry, I did not catch it.
Generic version of NDA for generic version of Lumify, which you acquired from Slayback Pharma.
Yeah, so what is the question?
What is the status? I believe it was already filed when you acquired it. When do you expect approval and launch?
So, to the best of my knowledge, is approved product by now.
Sorry, what is it?
It's an approved product by now. You ask whether it will get approval, it's approved.
Okay. And any timelines for the launch?
Why don't you answer?
We expect the launch to happen in this quarter only.
This quarter. Okay. Second, believe you are also working on the peptides. So any update on how do you see the liraglutide opportunity panning out over the next 2-3 years?
So yeah, indeed, this is very important segment for us. Long term, we put a lot of efforts. We are still putting efforts on both the API as well as the finished goods globally. We are planning to do it in each one of the markets. Specifically for the product, both Victoza and Saxenda, obviously we have what we believe are the dates of launch for each one of them, and we want to launch when we can.
Is it like a couple of years away or 4 years away? What rough idea of when you see the opportunity coming up?
Each one of these products, there is a date. I cannot confirm a date.
We'll share it at an appropriate time.
At this stage, we cannot share. But whenever the market will be open, we are planning to be there.
Thank you. Ladies and gentlemen, that will be the last question for today. I would now like to hand the conference over to Ms. Richa Periwal for closing comments. Over to you, ma'am.
Thank you all for joining us for today's evening call. In case of any further queries, please get in touch with the investor relations team. Thank you once again on behalf of Dr. Reddy's Laboratories Ltd. That concludes this conference. You may now disconnect your line.
Thank you. On behalf of Dr. Reddy's Laboratories Ltd., that concludes this conference, ladies and gentlemen. We thank you all for joining us. You may now disconnect.